Good morning to all traders. Welcome to this Tuesday's Market Insights video provided to you by Orbex. It's the 16th of June. And, well, Fed is now going to start buying companies' debt in order to support, of course, the economy over the coronavirus outbreaks in China and also in the US as a second wave is now underway. Now, in the UK, Brexit talks started or continued, if you may. There is some optimistic sentiment. Boris said that by the end of July, there is going to be, might be possible actually, to be an agreement between London and Brussels. And the other thing is that also on the FX majors, we've had the RBA decision. Well, they reiterated the same message as they did before. The RBA is not considered to increase the rates until progress is made on the employment and also on the inflation targets. It didn't move the market as much. However, the Aussie is trading near a very critical level, and that's why we're going to analyze that. So I'm going to start with euro dollar, then I'm going to go to the pound, and then Aussie, and then we're going to also see at the dollar cut. Starting with euro dollar, guys, we talked about this move to the upside being a triple zigzag, right? And this Y wave ending, X wave ending, and now we're waiting for the wave Y, right, to end, obviously to fresh lows below the 106 or so, whatever that low was a few months back. Now, that said, we talked about this move ending up here last time. Well, we've had another move to the upside, which is fine. 114.18 or so is that high that we've reached. Now, since then, we started moving lower, okay? And we moved down. I mean, this could be a leading triangle, if you may, right? So wave one, wave two, we're expecting 3, 4, and 5, okay? And that is going to be, since we're in a complex wave, it could perhaps just come out in an ABC manner, okay? That would be an A minor, B minor, and then C minor. The other scenario is that, of course, this is only an A, B, and a C. Now, if we take the Fibonacci extension, and that is the case, then that brings us down to the 111.43, okay? And this is also the 50 Fibonacci retracement of the last wave, wave Z up, okay? So this is a very good level in case we start moving lower. The other one is the 110.85 or so, okay? 61.8 Fibonacci, 120.27 extension of waves A and B. Now that, of course, assumes that wave B already ended at 61.8 Fibonacci retracement, which is of this move down here. Now, if we didn't end, it means that most likely we're going to go to take out the 78.6 Fibonacci retracement near 1379.80, okay? That is going to be a miss of the 14 level and likely to unroll with further weakness, okay? Now, these are the two scenarios I'm seeing. Now, the third scenario is that this over here, guys, is going to be an ending, expanded triangle. So we've already had this expanded version coming in. That means this is going to be 1, this is going to be 2, 3, 4, and 5. Very small 5. Now the 61.8 Fibonacci extension is 111.50. Okay, so wave 3 could probably come to around 1160 or so, and then another 10 pips for wave 5, and then we'll start moving higher for a fresh high, because if this is indeed an expanded flat, then it means it's going to be a wave 4 as well. Okay, so wave 4 and then wave 5. Now when I go and look at the GBPUSD, okay, I mean, guys, we're really hanging on the dollar's performance here, okay? So pay attention to what's happening with the dollar index, particularly to see how the rest of the currencies are going to pan out. Most likely, right? Obviously, the pound is a bit more affected by Brexit, so it wouldn't be as correlated with the euro, in my opinion, in this time. Aussie would probably be. Right, now pound, W, X, and Y. We were looking at this being zigzag. It didn't happen. That was a while ago. We also looked at this opportunity being a W, X, and Y, Z, okay, triple zigzag. It didn't happen. We broke above this level, right? So if we had stopped here, potential for Z would be good and would have a triple zigzag. Now wave B ended here. That means, and since we are in an ABC pattern, right, wave A, that's a 5 actually, so apologies, my mistake. This would be 1, 2, 3, 4, and 5, not an ABC, right? So we've got 1, 2, 3, 4, excuse me, and 5, okay? So I'm expecting that to move higher, potentially to 128.34, because this is the 100 Fibonacci extension of waves A and B, okay? If you see down here, that's B, and that's A, okay? So that brings us here. So it means more upside, right? That, of course, assumes that we're going to continue higher, and that was not the 1, 2, 3, 4, and 5, because we broke above the previous high. So, I mean, structure-wise, we could start moving lower anytime soon. That means it would, at this time, match with the euro-dollar move, okay? And this is, of course, a move to the downside. We're going to see a correction, perhaps to 128 or so, probably a bit lower, and then start moving lower, okay? That's the other scenario. If not, we're going higher. Now, the other move as well is that this could potentially be an ending triangle, since we are on the last move to the upside, right? And that means more upside, because if that was an upside, if this is an open triangle, it means that we are going to break the 61.8 Fibonacci extension. We're going to move higher to take out this ascending trend line. That means levels of 130, even 131 before start moving lower. Okay, and don't forget, in the medium term, this is wave B. So we want to miss this trend line over here, which is around 132, okay? Because this is going to be an A, B, and a C, as we have projected a couple of quarters back. Dollar Swiss. Dollar Swiss moving exactly as we expected. 3, 4, yeah, and we're expecting wave 5. Now, that said, last time we talked about this opportunity breaking down, right? We had C wave down, W. We're expecting ABC for X, and then we're going to get another move to the downside for wave Y in the intermediate term. So I'm expecting prices to end B wave very shortly, maybe a bit further down, maybe 1,094.40 or so, then move up 50 or 61.8 Fibonacci, retracement of this move, and then start moving lower again. And then also quickly on Aussie, very similar pattern with Euro and GBPUSD. I mean, in the current move, okay, we could see this as an ABC, okay, we could see this as 1, 2, 3, 4, 5. That means this is an A, then B and C, okay. And at the same time, we can also see this as a further extension. I mean, we did take the 161.8 out, okay, so I'm not really sure we're going to see that the chances of this moving higher are as good as they are on the, on euro dollar or pound dollar. But the thing is, what worries me really is this retest of the trend line. And we really need to break below that trend line to consider this scenario. Otherwise, most likely we're going to move higher, which means this is, well, wave 4. And for 1, 2, 3, 4, and we're going to move higher, okay? Because we still haven't seen an interaction between waves 1 and 4. So that means we're going to move higher, and that also means that we ended this decline down here, and most likely this is going to be 1, 2, 3, 4, and 5 as well. Okay, so this will be all for the day. I hope I was helpful, and I will speak to you again tomorrow.